Whether you have been wondering what insurance is, or you have been wondering, am I supposed to get an insurance cover? Is this something that I need to incorporate in financial freedom? This is actually the video for you. And hi guys, my name is Jane Dishu. I'm a financial advisor. And today I want us to discuss about insurance, get to understand what it is, the types of insurance that you can be able to take, and also how can you be able to incorporate it in your wealth creation journey, and basically how you can be able to choose the right insurance policies for your case. So the first thing I want us to discuss, what is insurance? So insurance is where you get like a safety net, or you pay an amount of money to an insurance company. This amount of money is called a premium, so that the insurance company can cover you or can guarantee you a cash compensation in case of any of this risk happening. So basically, having an insurance means you don't have to go through any emergencies, or you don't have maybe to float anything that happens to you or maybe to your assets. You get like a cashback, like insurance is going to sort that for you. So I know at this particular point you're asking, why do I really need the insurance and I don't want bad things to happen to me? So first of the thing, insurance does not protect you from getting bad things or these eventualities or emergencies happening to you, but it cautions you to make sure that you have money. You'll be in a financial capability to handle those expenses in case they come in place. So it's not going to prevent, but it's going to give you the cash value. So let me give you a case situation. In case you don't have insurance and you have an emergency, or you have something that happens to you or to your asset, and it requires you maybe to spend around maybe 500,000 Kenya shillings, and you don't have insurance, you're going to go to your savings, or you're going to go to whatever account you're going to withdraw that amount of money, and that means you'll be 500,000 less in your savings or investments or something close to that. But now instead, insurance is more important, because most of the time you're going to pay less than even like maybe 10% or 20% of the amount of money they are going to cover you, and sometimes it's even 4% of the amount they are going to cover you. So imagine you just paying 4% of what you're going to be covered. In case of that thing happening, you know that that 500,000, you're not going to have to spend it. So it's not going to save you from getting these emergencies, getting these accidents, but it's going to make sure that you are financially cautioned. You have the money to sort this, and you're not the one who's going to take that financial obligation. So at this particular point, I know you're asking, what types of insurance do we have in the Kenyan market? So I'm going to discuss them in the two classes of insurance. So we have life assurance, and you also have general insurance. I know the general, most of us know them in classes of the types, but we actually have the big bracket where insurance is divided into two. So when it comes to life assurance, most people call it life insurance, but in real sense, it's called life assurance. So when it comes to life assurance, in this case, you're trying to get a protection cover, or you're trying to get a compensation in case there is loss of life, or in case you are affected yourself as a person. So in this case, life is actually involved. So anything with life assurance, it means that at the end of the day, there will be compensation in case something happens to you as a person or to a life. So most probably the types that we have under the life assurance, we have what we famously know like life covers. So this is where insurance is going to pay some amount of money in case of demise. So most of the time it will only pay in case of demise, and in that classes we have different types of it. So for the life cover, we have life covers where you pay an amount of money for a certain period of time, and then you're covered for that period of time. And then we have life covers where you pay an amount of money for a period of time, but you're covered for a whole time, and this is what we call whole life insurance. So when it comes to life insurance, we also have other advantages under it, or we have other classes under it, like where you can get a critical illness cover, or maybe permanent disability cover. This one, we call them living advantages. So at this particular point, you're going to be compensated in case you contract a critical illness, or in case you are permanently disabled. So it's still under life assurance, and it's still under life covers. So at this particular point, it doesn't have to pay when you're not there. I know so many people ask, do we have living benefits when it comes to life insurance? And yes, we actually have living benefits. Like now, the critical illness and the permanent disability. So what you're going to do, the same model, a certain amount of money goes to the insurance, and now they guarantee you that in case of these incidences or in case of any of this, there will be benefit or a certain amount of money will be paid to you to compensate or to even help you float some of these bills that you might need to pay at that particular point. So in the same classes, we have some other policies, or we have some other covers under the life assurance. So these are called endowment policies. They can also go by the name education policies. So for this one, they have the living benefits. This means that for a certain amount of money is going to be refunded, or you can be able to access it at a certain period of time. But these endowment policies, they actually combine two aspects. They combine an aspect where you're saving your money is being invested, and you're also getting a life cover. So most of the time you're going to find the endowment policy or the education policies, they have a very high premium, or you'll be expected to pay a very high amount of money, because at this particular point, some amount of money is going to come back to you either as return on investment or savings that you have already saved. So most of the time, if you're looking for pure life insurance, most of the time an endowment policy is not a place to go to. But if maybe you're looking to have a protection portfolio and still you want somewhere you can be able to save and invest your money, endowment policies or education policies can actually help you with that. And in this class we also have other provisions that we have where you can be able to save your money for a certain period of time, like the pension provisions, and then you get a life cover at the end of the day. So in this category, the whole point is you are the person who is going to get compensated in case anything happens to you. And then the second class is the general insurance. So I know this one is the famous one because we have the statutory requirement in most of these classes, or in these classes of general insurance. And the first one, which is the most famous one, this one is motor insurance. So motor insurance is where you get an insurance for your car. So this is like you pay an amount of money to the insurance company, and now the insurance company is going to compensate in case maybe your car gets into an accident, or in case maybe the people that you have carried in that car have maybe get injuries or something close to that. But now there is a very thin line, and we have them in two types. In the motor insurance, we have two types. So the two types of insurance, we have the third-party insurance and we have the comprehensive insurance. I know the third-party insurance is the most famous one because in Kenya it's a statutory requirement. You need it. You need an insurance. You need the sticker for you to drive. So most of the people will go for the third-party insurance because it's also quite affordable. You pay like less amount of money. But what people don't tell you about third-party insurance, like the name suggests, this money or the compensation is only viable to other parties. It's not you. So in case you get into an accident, the third party insurance is going to pay the person that you have injured. This is their car and themselves. So you and your car, you're not covered, and your passengers, you're not covered. So for third party insurance, it mostly concentrates on the other person, you avoiding paying the other person. Like if you hit a car and you're the person who is on the wrong, rather than you paying the cash, the third party insurance is going to pay you. But now for the comprehensive means, like the name just suggests, it covers for everything else. So it's going to cover for your car, it's going to cover for the passengers in your car, it's going to cover for the other party. This is the other car that maybe you might hit, the properties that you might maybe damage, and even the other passengers in the other car. So comprehensive insurance is quite a good one at this particular point. But you have heard I have not actually mentioned that in the third party, I have not mentioned you are not covered, and this is why you might need to take another general insurance, which we call a personal accident cover. So this cover is going to cover you in case you get into an accident. So this is why it's quite important. If you're getting the motor insurance and you get comprehensive, also get a personal accident cover for that class. The second type of insurance under the general insurance, we also have the medical insurance, another famous one. This one people love, but it's quite expensive for most people. This one, as the name suggests, you like pay an amount of money to the insurance company, and then they are going to float your bills, either your outpatient expenses or your inpatient expenses. So in most of the cases when it comes to medical insurance, you can be able to take an inpatient cover only, but you can never take an outpatient cover only. So you can be able to actually take an inpatient cover, but if you want an outpatient cover, it has to be accompanied by an inpatient cover. For those people who might not know, outpatient is where you go to the hospital's visits and you leave without having to be admitted, but inpatient is where you're admitted in a hospital. So it's equally very important. So you're going to be given like a premium, an amount of money that you pay to the insurance company, and then they are going to promise the amount of money that they are going to pay. And they also have classes under that. You can be covered for inpatient, outpatient, accidents, evacuations, pregnancies, and other things, all the other things that are involved, dental, optical. So when you're getting a medical insurance, one thing you need to note is you have to ask if these all other things are inclusive or exclusive, so that you also know what is covered or what is not covered. Another type of insurance that maybe most people don't talk about it, but it's quite important, domestic package. So domestic package under the general insurance means that you're paying some amount of money so that you can cover the things that you have in your household. So in case maybe you have a phone, you have your TV, you have your cookers, you have your fridge, you have your expensive laptop, all the things that you have in your house, your expensive jewelries and all that. So you pay an amount of money to the insurance company so that in case there is fire or in case there is theft, you can be able to be compensated. So this is quite important. You don't have to own a home for you to get this. So even if you are renting, you can actually consider having a domestic package. If your phone is quite expensive, you can always make sure that you consider a domestic package. In this class, we also have the travel insurance. We also have the business insurance. So the travel insurance, the same covers you in case you left, you go outside the country, or you travel, or you take a vacation or a trip. So it covers you and make sure in case of any medical expenses, in case you lost your luggages, in case maybe your flight was delayed, all those things, they are covered under the travel insurance. So it's quite important, even when you're traveling, make sure that you have at least a travel insurance, just in case of anything. You can be able to float that bill to an insurance company and you don't have to struggle paying those bills, or in case of those emergencies. And then I have talked about business insurance. The same works around the same thing. This means that you cover your business in case of theft, in case maybe of fire, or in case of anything happening to your business. That loss, it doesn't have to come to you directly. I know you have had most people, maybe in case of a fire, someone asking, do you have insurance? Did you have insurance? Or what did you have? So this is where you're getting a business insurance to get that risk transferred to someone else so that you don't have to go through it. And I know in the corporate world, we have other insurances that you can actually consider. We have the professional indemnity cover. This is where, as a professional, you get insurance just in case you are sued or something close to that. Insurance can be able to start in place. And then we also have like the WIBAM. This is work injury benefit. So this is where like your employer gets that for you. We also have the personal accident also at corporate level. This is also where you make sure like you get an insurance in case of anything happening to you. You're also covered, mostly if you're in a construction site or something close to that. And also for professional, if you're partners or you own a business and you'd want to transfer that, we also have key man insurance. This is where like you cover yourself as a director, as a partner, as founders, just in case maybe one of you is not there. The company is paid a certain amount of money just to compensate and to be able to actually continue with the legacy. The fact that you're partners in a company, or maybe the fact that you would want to pass down your company to your next of kin, you might not be able to be there maybe to provide the capital that you're injecting into the company. So it's quite important to have the key man insurance, which is also part of the insurances that we have. So these are the most famous one, or this is what we have in the classes that we have under the insurance policies or the insurances in Kenya. Before I wrap it up, I would want us to discuss 3 myths that I have heard so many people talk about when it comes to insurance in Kenya. So one of the things is insurance is a scam in Kenya and they don't pay. One of the things, insurance companies are regulated by Insurance Regulatory Authority, meaning that they are not allowed to skip a claim. And in case you have an unclaimed, any unpaid claim, you need to go to these people because they are there to regulate. They are there to make sure that you are also paid the amount of money at the right time. So these people are going to do that. And let me tell you, as long as you have followed the terms and conditions under insurance, you will be paid. And as someone who have been working with the insurance company for now 7 years, I have seen people getting paid. So this is just a myth around people. The second myth is this is for rich people. Let me tell you, insurance is quite affordable. Like with them, with even 5,000, 2,000, you can actually get an insurance at the end of the day. So it's not actually for rich people. It's something that you can be able to incorporate in your budget. Like for example, personal accident cover, it's 1,200. 2,400 per year. Something like domestic package, if you don't have so many things in your house, it is less than 10,000 in a year. And we have the classes of expensive one, but there's always an option for anyone who has an income. And then the last one that most people talk about is, if I don't have a claim, I'm going to lose my money. Let me tell you, insurance works in two coins. It works in protecting you, but in real sense, we don't want anything to happen to us. I don't think there's anyone who pays medical insurance so that they can be admitted in a hospital. I mean, this is just a caution in case that happens. So I know there's so many people who are like, but I don't get sick. But let me tell you, the moment you get sick, insurance cannot be able to save you at that particular point. So you might need to incorporate it. And because it's taking a small percentage of your income, it's something that you might need to consider. And another thing, we have insurances that pay you at the end of the day. We have insurances that have a living benefit or living benefits if it's under life insurance or assurance. So one of the things around that, you have to understand and know that in case you're getting insurance, you're wishing that that situation will never happen to you, and you're praying that it is never going to occur to you that you're going to use that insurance. But in case you do, you'll not have to suffer financially, or you'll not have to struggle financially to float that particular bill. So I know at this particular point you're like, Jane, how can I be able to get an insurance cover, and which are these companies that are going to give me? How do I look at maybe the company's profile and everything else? So when you decide to buy insurance, the first thing, the company is a consideration. But if you don't have a good insurance agent or financial advisor, it might be a nightmare for you, because these companies are handling so many people. So you might need to consider having a good insurance agent. And myself as Jane, I'm an insurance agent. So you can also follow me on my Instagram page to make sure you book your free consultation, and you actually look at your protection portfolio, so that you can be able to guide you on how to get the best insurance. So after you have gotten me as your financial advisor, I'm going to recommend you on products that are going to solve your problems. So the first thing you need to do, even if I'm there as your insurance agent to give you the best company, do your due diligence. Go on those reviews, look if the company is registered, make sure that that company pays claim. You can also always get that in the comment section on the social media. What are people saying on that comment section? So go there, do your due diligence, and after that, you can be able to purchase an insurance product even online. These days, we don't have to meet for you to get an insurance cover. It's done online. Even everything, even for car insurance, for medical insurance, we don't have to meet for you to get insurance. At the end of the day, these are things that have been automated, because these are things that we need as Kenyans. And the last thing that I would want us all to note, it's time you actually incorporate insurance in your investment or financial freedom journey, because if you don't have this, in case of anything happening to you, you might end up going back to being in a financial mess, or you might stop in your financial freedom journey to actually cater for that particular emergency. So guys, I hope you have enjoyed this video, and in case you have learned something, make sure to share, like, comment, and also invite other people to come and learn more about this knowledge, and also subscribe so that anytime we are posting any of this video, you'll be notified. And until next time, thank you.